Jordan, very good to see you. Timely topic, recession-proof investing, 4 strategies for navigating this market volatility. We've been hearing a lot of scary headlines about the market lately. Just want to pull up a picture of the S&P's 3-month performance. What's going on?
It's a lot of craziness in the market, a lot of volatility in the last 3 months. You probably have seen the news, of course, many times about the tariffs.
Yeah.
Talking about tariffs being implemented, tariffs being retracted. Then there's changes constantly, and the market hates uncertainty. And with this uncertainty, there's been a lot of volatility in some negative few months. And so we got to make sure that we look at this as part of the big picture plan and know kind of how does this affect our plan, or does it affect our plan?
hmm So the first strategy is kind of a question. Cash is considered king in recessions. Are you recommending people allocate a larger portion of their portfolio to cash right now?
To put it simply, no, right?
Okay.
If you have a plan, you don't need to go to cash because the money you might need for the next few months or few years is already in a safe bucket that you can draw on, and you're not going to be forced to sell when the markets are down. Plus, cash collects dust, so to speak, and it gets inflation added to that. We want to make sure not only do we maintain with inflation, but we outpace inflation. And recession can be a scary word to many people, but let's be frank, there will be recessions in the future. There will be recessions even past that. We need to have a plan that's going to get them not only to recessions, through recessions, and be recession proof. And when you have a plan, recession is not a scary word anymore.
Right. Good point. All right. I do want to ask about defensive stocks. A lot of people flock to these: healthcare, utilities, food and beverages. I mean, we still get sick. We still need to eat.
Yeah, and these stocks are great, and we already have these in our clients' plans as part of a diversified strategy. And maybe from time to time, we do shift a little bit more based on the market trends. But I do not believe everyone should just try to time the market and pivot all to these defensive stocks just because there's some volatility. Because as we've seen, especially the last 3 months, all it needs is one announcement, one change, and the stock market goes up. Other stocks are negatively impacted. We want to make sure we have a diversified plan and not try to time the market or time to a different sector just because we think, or because the news is sending a lot of messages out there that's scary, the recession's coming. That should not impact you. Your plan should dictate what decisions you make.
hmm And what do you think about dividend stocks and other fixed income investments like bonds?
Well, our philosophy as a firm is really to align the money to the purpose. So we do some money in safe money investments that have no market risk, and it's going to be there if you need it. We have some money that is designed for income. And that's what you just mentioned: dividend stocks, interest from bonds. I think those are great as part of that income bucket to kind of sustain your income inside your portfolio. Now, the third bucket we use for our philosophy is growth, long-term growth. What I don't believe is you should have, if you have a plan and you have money in a growth position, you shouldn't shift that to income positions just because you're nervous, right? Because if you give that growth bucket, those equities time, it will perform, and none of us can time the market perfectly. So I think those stocks, dividend stocks, and I think those bonds fit inside that income portion. But again, I wouldn't shift everything to one sector just because you're nervous.
hmm And last, even during downturns, or especially during downturns, keep investing. This is known as dollar cost averaging.
Yeah, this is especially when you're younger, your 401k is not the time to pump the brakes, but man, that's put even more money. If we can squeeze a few extra percent and contribute that to the 401k, that's going to benefit you long term because you're buying at different intervals every few weeks, and you're buying the dip, so to speak, so that it's going to recover even faster. If you look at the time frame from the Great Depression to a few years later, still at 700 is the index. But those that dollar cost average, they actually had tremendous gains because they were consistent in their plan. Now, some of us watching might be like, hey, I retired. I don't have extra funds at dollar cost average. I'm in the distribution phase. Well, maybe we can't dollar cost average because we're taking distributions. But when you have a plan, maybe we tweak some of the aggressiveness in those long-term assets and say, hey, market dip, we're not going to dollar cost average, but maybe we want to tweak up the aggressiveness to recover when the market does recover. Or maybe we add some tax strategies when the market kind of is volatile and dips. Maybe we do some Roth conversion. So there's always something you can do when there's volatility in the market.
And this comes back to what you've been saying, what you say all the time. You need to have a plan and you need to stick to it.
And I think the easiest way to not only do we help our clients, have a plan, or people that are interested in having a plan, we'll create that for them, but we also stress test it. So if we show you, hey, if the market corrects itself, if there's a recession, if tax rates go up, if you need long-term care, if all these things happen, if we can show you this and you still have a 100% success rate, that gives you clarity and confidence so that you're not worried and stressed. And that can actually give you a license to actually spend, because some people just worry and wonder and they don't have the peace of mind or the confidence and clarity to enjoy their life. So if we create a plan, if we stress test the plan, that'll hopefully give every single person that confidence and clarity they deserve.
Mm-hmm. Well, Jordan, again, I'm glad we got to talk this through because I think a lot of people are feeling a little bit anxious right now. So if somebody wants to talk to you about creating that plan that accounts for or even capitalizes on volatility, what's the best way to reach you?
Yeah, our mission at company is to help our clients live today and plan for tomorrow. So if they want to start up and have a conversation, they can call our main number, 847-499-3454. And hopefully we can help them live better today and have an amazing plan for tomorrow that they're confident in.
Yeah, well said. And stand by, everybody, for a QR code at the end. Jordan, thank you for your time.
It's a pleasure.